Well, hello, Maverick Traders. It is May 13th, and we are just back from the 2019 Maverick Trading Summit. And at the summit, we talked about how this was a big weekend, and I remember saying that I can't remember a weekend within, I'd say the past 6 months where there was this much uncertainty going in the weekend, and we talked about it's either going to be a -3 or a +3% going into Monday. And I tell you what, we definitely got more of a -3%. So the 25% tariffs went in on a portion of Chinese goods, and the Chinese came back and they retaliated and they rose tariffs on their end. So we went from, hey, everything's fine, we're getting along great, to now there's no deal, and now they're fighting with tariffs. Obviously, the market did not appreciate that. They did not like it. We talked about how last week, if you take a look at the candles last week, the market was looking for a bottom. The market really wanted to bottom. We got a Morningstar candle on Monday. We got, again, this doji here on Wednesday. We got another Morningstar. Thursday, we got an up candle on Friday. So we got a lot of up candles off the bottom. And there was some optimism. You can see that today's candle has completely broken the charts. And look, if you wanted to stay bullish and you were hoping that the market was going to recover, I'm sorry to tell you, it's now confirmed. And we have a saying here at Maverick, trade the market in front of you. And this is a technical breakdown. And this candle here, where we opened at the high, closed down near the low. We didn't close on the low, but pretty close to the low. This is just not the kind of candle that leads to an immediate rebound. So we've got obviously some problems, and we've got the markets are, I don't want to call them in free fall, but they're definitely, there's more volatility. We saw the volatility index spike above 20. So again, there's a lot of things telling us, hey, you know what? This recent high that we had just 2 weeks ago, boy, it seems like forever ago. That recent high is not going to be touched for a while. It's just not going to be touched. So the breakdown below the 50-period moving average, we've got pretty much everything telling us you definitely cannot be on the bull side anymore. Look, that doesn't mean you just panic and freak out and go all the way bearish. We're still going to follow rules and allocations. I still have moving averages that haven't crossed. They're not moving lower yet. The 20, yes, has moved lower. The 50-day is still moving up a little bit. But you definitely want to have your allocation at least at a 0 or a -1 here on these markets. So that's just how it is. The market is broken down, and you have to be neutral to bearish at this point. Utilities actually traded up today, but you can see that tech, services, high beta is what got hit. Tech, services, industrial, that's where the high beta was, and sure enough, those got hit. The heat map is not pretty. Close your eyes there. That is a whole lot of red. A whole lot of red. And you can see outside of REITs and outside of utilities, there just wasn't really anywhere to hide today. And again, like I said earlier, the high beta stuff got absolutely creamed today. So whenever you see these kind of markets, you definitely see some pain. It was an 80% down day. Not a great day in the market. So again, this is how markets go. They go in trends. They go up, up, and up, and up. And then last week, we went from being overly bullish to neutral. And now we are now leaning more towards the bear side. It's just, again, we are market agnostic. We just want our trading to follow the market as much as we possibly can. So let's take a look at a few trades that triggered, and I got to tell you, I was actually quite surprised today when I looked in trades and I looked through the trader trades. I looked through some of the things I was looking for. There were some stocks that actually made some pretty good triggers today. If you take a look at stuff like H&R Block, McDonald's, they actually looked really good. And if you think about the businesses, the things that held in better were the things that had no international exposure. Now, yes, McDonald's does have international exposure, but something like an H&R Block, again, very domestic. So let's take a look at just some of the charts here. This is one of the ones we talked in the trading room, and we talked about Interstellat. This is a foreign telecom company, and you can see that someone forgot to tell this stock that the market was in panic today. I didn't see any news on it. I checked news, didn't see any. Obviously, there was some because we did have a pretty good pop in volume. But this thing opened up, went down a little bit, recovered, went all the way up to the top, and then closed. So this is a really nice candle, up 3.5% on a really, really difficult tape. So again, I think this thing makes its way up to the 23 area. That's kind of what we talked about in the trading room. There's going to be this band of resistance back here that we're going to start to run into. But for me, a diagonal call spread with a 22 or a 23 here, it definitely makes some sense, even in this very difficult tape, because you see a stock that has made a new, not a new high, but a recent high. It made a breakout. It did it on good volume on a day where the market got taken out and shot. That tells you that the people are not worried about the market and about the tariffs when it comes to this stock. Something had happened that was greater than those concerns. Now, the rest of the trades, I want to show some shorts because, again, more shorts triggered than longs, especially. And I know that I took today's opportunity to go from neutral to net bearish in my personal trades. And sure enough, this is one of them, Box. This is Dropbox.com. So here we have a stock that did not participate in the market rally. So if you take a look at the NASDAQ has been going up this whole time. Dropbox has not. It has underperformed. So when the markets come down, the stocks that underperform, you would think that they would go down less. That was one of the things I always thought as a young trader, is that if something went up 50% and the market tanked, then it would get hit the worst. And then something that only went up 1%, I thought, oh man, that's probably not going to go down much because it didn't go up much. Do you know what ends up happening? This one does pull back 10%. This one drops 20%. Relative strength and weakness. I've just definitely learned that over the years. And we talk about finding the trades that didn't participate in the upside. Those are going to be the best shorts. So Dropbox here, definitely one of those. You can see it's coming down to some major support right around the $18.50. We've got 3 points here. But again, if this market continues to drop, this thing's going to blow right through it. And I think that 17 is a pretty good target on this. If you take a look at this, that's a $2 move. That's about a 13-14% move on this stock. So we've got just long puts on it. Another one, Mallinckrodt. We talked about this in the trading room as well. This one had some news on it overnight. So it did drop 7.12%, but you can see it didn't gap all that much. It gapped down about 2%, but then it got hammered. I just heard the news in the morning. It was something about possible litigation, and not just litigation, but litigation against the CEOs to where they could potentially face criminal charges with some of their accounting things they've gone through. So obviously, not a great story. Down 7% on a bad day. Again, gap down, run down. It did come off the bottom. At one point, this thing looks like it was down about 12 or 13%. Came off the bottom, but just a very ugly day. But look at this great bear rally. And that's what we talked about in our session in Vegas, was that this thing ran from 14 to 17. That's a 20% bear rally. We love to be able to short into these stocks that are in firm downtrends that have these big, massive 15, 20, 25% rallies. It's a great time to be able to go in and enter a bear rally. And then another one, Amarin. Just a really nice chart here. You can see this is a descending triangle. Descending triangle, broke below that low, and this is the kind of candle you love to see. Gaps down, never goes up, and pretty much closes at the low. Constant, steady selling. Now, yes, there is going to be some support down here in the 16 area. It would not surprise me at all to get a bounce at 16, but after that, you're looking really in the 12 to 14 area. So if you're willing to give this thing some time, I think this thing's got some room to drop. Again, this is a $2.27 move to get to the top of that target area. We're talking about an almost 20% drop from here. So this is a biotech company. It does have some volatility, moved 6% today. But you can see this thing has already been working its way down from its high in March. And again, that descending triangle pattern really triggered nicely today with a very nice candle. So I think the big question a lot of you are going to have is, okay, well, what next? Where's the market going? And I'm going to go back to trade the market in front of you. Don't trade the market you think it should be. Don't trade the market you want it to be. I know that myself personally, I've been overly bullish. And I would have loved to see a new high. It would have been very good. Instead, the market faltered. I got us some stuff. I've taken some losses, but my bear stuff is now working. Yes, I would have loved to have seen another high because that's what I was basically betting on. I've been betting on uptrends and higher highs and technology and consumer outperforming. It's been the right place to be. But it definitely turned down. At this point, I have to admit that the trend has now changed. Now, I don't know for how long. I don't know for how deep. But what I do know is that the market is definitely challenged here. So, best case scenario, the market flattens out here and goes sideways for a while. Worst case scenario, we drop. On the trading room in Vegas, I said that if we get a pushback on the tariffs, if we get some sort of resolution, I thought the market could go up 2 to 3%. If we had a complete breakdown, which is what it looked like we had, I said I think we're in for a 5 to 10% drop. So I'm still thinking it's going to be a bigger drop. The market is still looking like it's going to be a bigger drop. So again, just prepare for it. It may not happen, but I think that's where you've got to be positioned, that this market has broken technicals. And when things break technicals, this is not where you say, yeah, but this is doing good and the economy is doing good and I don't want to get out at losses. This is where you really just need to act. And again, you should already be following your plan. You should already have had some things to do when this happens. So the futures right now are trading down fractionally. That being said, we did get a little bit of news. I don't want to make too much of it because it's not that big of a news, but they did file the papers to initiate the next round of tariffs on China. Now, that's not going to happen until potentially June, but they did file those. So again, that's another bit of proof that this thing might get worse before it gets better. So we have futures trading down about 0.25%. But look, with this kind of volatility, we could easily see another 1, 2, 3% drop overnight. That wouldn't surprise me whatsoever. Tomorrow, import price index, nothing good. Again, that's not going to mean anything to the market. We do have 2 decent-sized earnings reports, Ralph Lauren and Tilray. So if you are in the marijuana space, or if you're just into marijuana, that's going to be a big one. Whatever that one does, expect the rest of the sector to follow. All right, well, that is the market roundup, everybody. Happy trading. Goodbye.